Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, June 2nd, 2013. We had an interesting little route in the market on late Friday where we came down about 150 Dow points in the last 25 minutes or so. That was this move from here to here. And it left quite an interesting mark on the chart. You'll note that I've been talking about the 1635 area here in my blog for pretty much some time now, the whole of last week, seeing if we were going to retest there or not, and saying that the break of that area should open the market up to more downside. So the question is now, having lost that prior low, and there was kind of an uptrend in place like this over the majority of the week, and then it just kind of snapped late in the day Friday, is whether or not we get the move to here, which would be the natural target, because it is, of course, the trendline support, and more importantly as well, notice the prior highs are here as well. So it's also a breakout point. You went to here, you had a double top. After that double top got taken out, market went much higher. So this area should be very supportive. So path of least resistance for now for the market is to make it to about 1600 in the coming week or so. We shall see. There is some congestion right here. It'll be interesting to see if the market chops through that. You can see that right here. That's this area, so that should be a little bit supportive, but loss of that is probably going to take us to target, as I was saying here. Extra reason for that, of course, is being also that these three bars here that are underneath the congested area, they probably won't support much. You can see clearly that it's kind of just a straight up move, kind of one time framing there. As far as one time framing is concerned, should be of note that this is the first time in a while that we've actually stopped one time framing on the weeklies. Remember, one time framing is when you consistently make higher lows, and on the futures you don't take out the prior low by more than 2 ticks. And on Friday's action, we finally on the weeklies went below the prior week's low, had a to close the week negative below there. So we'll see. Now, in talking about one time framing, that of course brings us to the profile. And here's where things get kind of interesting in terms of possibly a feather in the cap for the bulls on Monday. I want everybody to pay close attention for this. This is a very interesting phenomena that happened. The people who were selling the market late on Friday, they got what's known as short in the hole. And the reason for that is because the point of control is actually here. And note where value is, and note where price closed. Price closed here. So usually what happens the day after that is you usually get some sort of a counter move like this, and then the strength of the counter move, how it acts, will determine whether or not the market goes lower or not. Sometimes you get a gap up usually and it'll hold, and then boom, the market goes higher, or you get a gap up and fade and the market goes lower. Obviously we won't know that until next week, but I am pointing it out that it's important to note that the way that we broke the 1635 area here, which was very key. That was our double bottom on what I called the plunge low. The way that we broke it is key. We didn't break it by just slowly grinding through it and making, for instance, a profile that looked like this, or even a profile that looked like this. We had a very, very stretched out profile where we snapped it on momentum selling that was all single prints going down. So this is more of like liquidation break selling because we broke here, rather than new money coming in and really starting to steadily hammer the market lower. This is not indicative of new money sellers. This is indicative of like a liquidation break that in this case took us below a key support level. So again, we're going to be watching closely to Monday to see how this acts. If the market opens up flat on Monday and finds acceptance within this area here, we'll call this the spike, right? If the market finds acceptance here, meaning we open somewhere in here and we stay here and we can't get higher than here, that's bearish. If the market moves back up to this area here, I'm sorry, I didn't mean to make that square. If the market moves back up to the area here, which is more of the value area, and holds here, then it's obviously less bearish. Then you would look at this as an excess low, and we return back up into balance, into the value here. I think the propensity for the market is strong Monday that it will do some sort of a bounce because of these people getting short in the hole. However, we do have a lot of overhead supply here, I would think, right? There's a lot of value here, and all of this is going to probably weigh heavily on the market because there is this balance area. So we have now moved out of balance, and again, the key Monday is going to see, do we hold out of balance, move back in, and this was a fake out or not? So in the very, very short term, it is actually bullish. You'd be surprised to hear me say this, but it is actually bullish because they did sell away from value. So on Monday, do not be surprised if there is some sort of a snapback. We'll have to judge the next move by seeing how strong that snapback is. Can it get back up into value or not? Again, as I was saying, I would say remaining within this area here is bearish. If we can't get up into value anymore, if you can't get back up into value at all, I construe that as very, very bearish, and I would be thinking that would confirm the move in the S&P down to the 1600 level over the course of the week. All right, let's talk about a couple of ideas here in terms of individual stocks. I've got a few. I just want to update you on Apple. Apple continues to show relative strength. It obviously closed weak on Friday with everybody else that was liquidating, but the stock has been showing a lot of relative strength. Notice that you can look at a SPY daily, and you can see the difference in the S&P on the daily between Friday and Thursday, and I'll make this a little bigger. Notice that Friday, you didn't get anywhere near Thursday's high, but Apple broke out over Thursday's high and took off. So I think that the inverted head and shoulders pattern that I've been discussing is still intact, and I'm slowly building a position here and protecting it with like a wide ratio spread, 450 to 420. You can do a wide butterfly, you can do a broken wing butterfly, put it out in June or July, and that'll protect you down to 420. The key to this play to me is the hold of the neckline at 420. If at some point Apple moves below 420, the pattern is negated, the trade is over, and the inverted head and shoulders is probably not happening. But anything between here, and I know this is like a 30-point range between 450 and 420, is really noise. You can consider it the building out of the right shoulder, just like this area here is the left shoulder. Okay, let's take a look at Google. Google is coming in a bit, but not enough yet. I'm maintaining this 50% fib retracement here. I'm going to be looking at ratio spreads early in the week to possibly be buying 840, 835, selling 820. That's trading for a small credit now. If I can get that off on Monday, that would be good. Google may have a move to either the 50% retracement or the 61.8% retracement of the recent move, which I think would be buyable. The 50 would be very interesting because note that the 50 is actually touching right at a prior high. I find that pretty interesting, right? You've got that area right there at 840 and change, and the 50% retracement here is also at 840 and change. So that should be interesting to see Google come to the 50. That could be a bounce point right there. I'd probably be a buyer there looking for a little bit of an up play in golf, Oscar, golf. Gold and bonds. Gold had a very weak Friday. I still think the only play here is really the short of this double bottom, and then where would it go? I think gold to 1100. It would be a big break possibly to here, and then it's a buy. This is on the GLD, but it corresponds in a 10 to 1 ratio to the futures. This is like 1/10 of it. So look here, this is like 110. That would be 1100 in the gold futures, and here's the break here at about 1370 to 1350, whatever that is in the gold futures on a retest of that low. So we'll see if that happens. In between here and there, I really wouldn't be interested. Again, I'd be interested in shorting this break if we retested it for the third time, and then looking for that buy at 1100. But between here and there, I have no interest. All right. Let's take a look at bonds, and we're going to use TLT as a proxy, which is Tango Lima Tango. This is an ETF for the long bond, and I'm mostly interested in the weekly chart. Obviously, bonds bounced pretty strong late in the day on Friday, but that doesn't change the fact that the overall picture here is bearish. I am not interested in the continuation move down to here. I'm actually interested in the counter move. I've drawn this line here, and I've noticed that over time, especially on these weeklies, you can find this going way back. If you look at bonds on a longer term basis, they tend to respect horizontal support quite well. There's usually a bounce wherever there were prior lows. You can see it happen here, and now a lot of time has passed, so that's actually good, because had it come into here a third time very quickly, I wouldn't be as trusting of it. But once a lot of time passes, then I'm more trusting of a retest of support. So I'm actually going to be watching this level for a bounce in the TLT, looking to be a buyer. You can notice here I've written down 135 in /ZB. That means that in the bond futures, which are obviously a lot more leveraged than this ETF, it's the 135 level. That would be the level that you'd be buying in the bond futures on a retest there. So I'm going to be watching that closely this week. All right, that's all I have for this week. Have a great weekend. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.